Here's a surprising fact. U.S. stocks have historically shown a tendency to rise around the Federal Reserve's annual Jackson Hole Conference, a summer gathering that often sets the tone for markets. But here's where it gets controversial. While this trend has held true over time, recent years have seen significant volatility, leaving investors wondering if the pattern still holds. Could this year be different? Let's dive in. Imagine the bustling floor of the New York Stock Exchange, where traders eagerly await clues about the economy's direction. This anticipation peaks during the Fed's Jackson Hole Symposium, held in the scenic Wyoming mountains. The event, taking place from Thursday to Saturday, culminates in Federal Reserve Chair Jerome Powell's highly anticipated speech on Friday, a moment that can sway markets dramatically. A fascinating analysis by DataTrek Research reveals that since 2010, the S&P 500 index has averaged a 0.9% gain in the 5 trading days before and after the Fed chair's speech, with most of the increase occurring post-speech. Nicholas Colas, DataTrek's co-founder, explains, markets seem to gain incremental clarity from the chair's remarks, which often boosts equity valuations. This insight suggests that Powell's words carry significant weight, providing direction for investors. However, this year has bucked the trend so far. The S&P 500 has dipped in the lead-up to the speech, as noted by Colas in his Tuesday research note. This deviation from the norm could set the stage for a modest rally by Thursday, he predicts. And this is the part most people miss. Exceptions to this trend have occurred, most notably in 2022, when the index plummeted 7.4% in the 10-day period surrounding the event. That year, Powell's stern warning about slower growth amid high inflation sent shockwaves through the market, leading to a 19% annual decline in the S&P 500 as the Fed hiked interest rates. Interestingly, the index also fell in 2013 and 2015, years when Fed chairs Ben Bernanke and Janet Yellen were absent from the symposium. This raises a thought-provoking question. Does the presence of the Fed chair directly influence market outcomes, or is it simply the clarity of their message that matters? This year, all eyes are on Powell, as investors seek hints about a potential interest rate cut at the Fed's September 16 to 17 meeting. Recent weak labor market data has fueled expectations of such a move, with Fed fund futures on Tuesday pricing in an 84% chance, according to LSEG data. But here's the controversial angle. What if Powell surprises markets by maintaining a hawkish stance? Could this derail the anticipated rally, or even trigger a sell-off? As we await Powell's speech, it's worth reflecting on the broader implications. Does the Jackson Hole Conference truly hold the power to shape market trends, or is it merely a coincidence? And what does this mean for individual investors navigating an increasingly unpredictable economic landscape? Share your thoughts in the comments. Let's spark a debate.